Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be focusing on the idea of time and price, right? Putting time and price together, understanding these different components that make up the market and trying to sort of be able to navigate through the markets applying these different ideas and concepts. So what we're going to be doing today is very simple. We're going to review a little bit of the daily cycle. We're going to be talking about the key times during the day, how we can use that information, how to frame trade ideas around that information, and how we can essentially execute based on time and price. Now, I know there are many traders that do not use time or do not consider time important, but for me and in my experience, it is something that consistently happens enough to be able to exploit that with size. So this is what we're going to be talking today. We're going to be reviewing the main different times during the day that repeat every single day, essentially. And we're going to be applying that to the charts afterwards, after we've reviewed that information. So with all that being said, guys, if this sounds like something you want to learn today, make sure you stick to the entire video, because once again, I'm going to be trying my best to provide you with knowledge and information for you to apply and actually trade. So let's get started with today's lesson. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, IPDATrader, and thank you very much for sponsoring this channel in this video. So IPDATrader is a very well established broker which allows you to trade crypto, forex, indices, stocks, commodities. You're free to trade pretty much anything you want with them. They're regulated in Europe and South Africa, so if you sign up with them, you will be paying 0 commissions, which is a very good edge on its own for your ECN Plus account. So feel free to try them out. You will see a link in the description below. I have been testing their liquidity feed and their execution, and I haven't had any problem. They're pretty good, and I'm very happy with them. Unfortunately, they do not accept clients from the US, but everybody else is able to sign up with them. They have 0 commissions, they have 14 years of experience, and they have very good execution and data feed, which is very important for you as a trader. So once again, you will find the link in the description below. Feel free to check them out, sign up with them, deposit a small amount, and see how you feel with them. Now, thank you very much once again to IPDATrader for sponsoring this video, and the link will be down in the description below. Now into today's lesson. Okay traders, so here we are on the drawing board, and as we said before, we're going to be focusing on time and price, and for that specific reason, it is what we're going to get started over here discussing the different key times during the day that in my opinion every trader should be aware of. Okay, so once again, key times during the day. Before we get started, these are based on UTC +1. I trust you that you're smart enough to be able to convert that information into your time zone. So I'm not going to be covering all time zones. I'm just going to be working with UTC +1, just to make that very clear. Every time that I'm going to be giving you here is based on UTC +1. So let's get started over here. Okay, so we know that every daily candle has 4 landmarks, right? I've discussed this idea numerous times. It's very simple, right? We have an open price, we have a high, we have a low, and we have a closing price, right? Every single candle has these 4 landmarks information, right? So with that being said, we need to understand how different times during the day influence the creation of that particular daily candle with the 4 landmarks, right? Just imagine this is your daily candle on the daily chart? Well, let's get started over here. So I'm going to be listing all of them first, and then we're going to be getting into understanding what do we do with those and how to play them. Okay, so we have Sydney, which is when the new daily candle begins and the algorithm resets for the day. I've been saying the very same thing for years. It is what happens. It is how the markets work. At 10 p.m., you're going to get an algorithm reset and the new daily candle is gonna start. And by the way, this is FX, right? This applies to FX. So we have that. I have not tested this theory anywhere else, so I can't tell you if you should be trying to apply that to different markets such as stocks or commodities or whatever it may be. I've just tested this in FX and it works very, very well for me. So we have Sydney, once again, which is when the algorithm resets and the new daily candle begins. We have True Asia, which is from 12 till 6 a.m. in the morning. By the way, during this period, I am sleeping, so I'm not usually trading this, but we're going to be getting into the details on how I use this information. Then we have Frankfurt. Obviously, that comes before the London Open, which is 6:15 till 8, which is when the London actually opens. So we have London, which opens at 8 a.m. Then we have London US Cross, which is 12 till 15, and this is where you're going to be getting the most amount of volume. Once again, we're going to be getting into that in a second. You obviously have the US Open at 13 p.m. and that's it, right? These are the main key criterias times during the day that I look forward to and that I essentially apply to my trading. So we're gonna be now going through each and every single one of them one by one, trying to understand what does that mean in the charts, right? And after that, after we've done with the theory, we're gonna be going back to the charts and I'm going to be walking you through a day applying these different times. So let's get ready. Let's get started. So let's do this. Once again, Sydney is when the algorithm resets. I do not trade it, but there is a Sydney high and there is a Sydney low. You can label that in your chart. That is a liquidity pool, okay? And do not worry if you're confused now. As we go back into the charts, everything will be much clearer. Just bear with me here and follow my advice, right? So we have the Sydney session, which will create a box, right? It will usually consolidate more often than not. You're not going to see some sort of very big expansion happening during this particular time during in the day, but you're rather going to see some sort of consolidation, and it will print the Sydney high and low, which is a liquidity pool right over here that is then very likely for Asia to get rated, right? Asia will very likely rate both sides of Sydney. It is very unlikely that Asia is going to leave some sort of Sydney highs or lows unliquidated. It will do it. It's not 100% guarantee, but most often than not, what I've seen throughout the years, and I've been trading the same way for years now, is that both, so the Sydney high and the Sydney low, both of them will get rated before Asia is done with its range, right? So that's just something to understand for Sydney. During that period, I'm not actively looking at the market because there's low liquidity and I'm not interested in that. But this is something that you have to understand in terms of the timing. Okay, so that's for Sydney. We've now covered Sydney. We move on to True Asia, which is once again your Asian range, which I've talked about numerous times. And this is very, very important. This is what I base, I'd say, 60% of my trades off. It's very simple ideas. You will have an Asian range, which depending on the FX pair is very likely to have a pip amount or not. And this is your range, right? Once you've reached the 6 a.m. in the morning, you will have your range. And it is very important that you pay attention once again to the Asian high and the Asian low. Those are liquidity pools. And you're going to see how Frankfurt is going to come in and is very likely to raid one of those, right? One of them is going to get taken more often than not during Frankfurt pre-London hours, right? Just before the London opens. What you will find, which is a pattern that I've seen numerous times, is that as we move closer and closer to the London Open, right, you're gonna have one side manipulated, and the London guys are gonna hit this price at the very top and are gonna drive to clear the low, right? Once again, you cannot be blindly just selling, saying, hey, we've just taken the high, let's go take the low. You have to have a narrative. You have to look to your left and see, does it make sense for price to actually reverse at this point? And if you maybe have a particular order block that you like, right, then that may be a trade for you to take. But please do not blindly just sell and buy above Asian highs and lows, because you're gonna get hurt. You need to wait for the story to make sense. You need to wait to see and see to your left that you have some sort of structure to base your trade idea around, right? You don't want to be blindly doing this, because it's not going to work very well if you use that approach, right? So that is the Asian range. It is one of the key components to my trading. I always wait for it to develop before I even look at any trading, right? I'm not interested in trading until we finished building that range and I have that information to make decisions, right? Depending on the pair, but for example, GBP USD is a pair that manipulates both sides very, very consistently. And it provides wonderful trades if you know what you're looking for. But what I'm trying to say here is that depending on the pair, it will have a higher or lower success rate in manipulating both sides of the Asian range. Right? The London Open is just usually a trade to take one of the two sides, or for a potential midline test of the box, which is something that I've covered as well, if one side is going to be protected, right? Which will happen from time to time. You will see just one side liquidation, a return into the midline, which is the equilibrium point of the range, and a continuation up. That is also very likely to happen. But I will only anticipate that if the Asian low is pressed against external structure. If it's not, then I'm going to assume that both areas are going to get manipulated, as long as I have, once again, this story to my left that confirms that idea to me, right? The only way I see Asian highs and lows being protected, and that's due to my own studies, has been during times where the Asian low or high has been is pressed against external higher time frame structure. If it's not, then it's very likely to get taken, and that's how I think about it, right? So that is the Asian range, and the Frankfurt roll into it, and the London roll into it. It is very, very simple. London Open will likely be a part of a move to capture one of the two sides. Sorry, that's the wrong thing. And Frankfurt is very likely to raid, once again as well, one of the two sides of the pool, of the liquidity pool of the box, right over here. You should pay attention to the equilibrium point of the range, which is just the 50% of it, and you want to play around that. You want to play trying to understand, what did Sydney do? What is Asian doing? What are we doing during Frankfurt? You have to be asking yourself that question as the day progresses and you're trying to make decisions to achieve profitable trades, right? So that is all there is to the London Open and every time before that. So let's move on now. Let's get rid of all the drawings. I don't want to get this too messy. Let's get rid of this. Whoops. So I want to keep that, but I want to remove this. Okay, so I can. That's fine. Let's now talk about the London US cross. Okay, and I'm going to put this in green. This is something that, once again, it's very, very important. And this is something that I found through my journal and analyzing my trades, which is this is your best time window, let's say, during the day to execute profitable positions. You want to be pressing your advantage during this particular time. Why? Right? You might ask yourself why. It's a high volume, high liquidity, lots of trading activity happening from institutions, which means that you're very likely to see sustained moves in a given direction, right? So if you want to be somebody that's going to be trading the trend, just following where it's going, you're going to have a lot of success doing so during this period in the day. Because once again, this is your time of high volume, high liquidity, lots of trading activities happening at that particular time. POI mitigations are very likely to play out during this period, right? That is something that I've experienced as well. Now, you're very likely to get liquid mitigations as well, which is an idea that I've covered in the past, which essentially means that you're not going to get order flow development in APOI. It's just going to be a smooth tap in and a tap out moving in the opposite direction. This is a liquid mitigation. A non-liquid mitigation would be if we play around the block for a while, then slowly start shifting and moving higher. These are your only two scenarios that POI is really, right? Liquid mitigations, single tap, move away. Non-liquid mitigations, consolidation, liquidity engineering, liquidity grab, continuation up. It's a very, very simple format to follow. So, and once again, the US Open is part of this period. So you want to factor that in, right? A mitigation at US Open is something that I'm always very interested in, right? Because I know that's a time of high liquidity, high volume. I'm very likely to either be correct very quickly or be wrong very quickly, which is something that I like. So I play around those times and try my best to make the most of whatever volume time I'm trading, right? So this is principally everything that I look forward to in the daily cycle. What I'm going to do now is, let's remove that. I'm going to put in, let's use orange, the times that I do not actively trade, but you must still understand what they mean, right? So this period over here from 10 till 6 a.m. is something that I'm not trading, but something that I pay attention to as I come into the market and start doing my analysis and my potential mapping for the day, right? Not something that I trade. However, on the other hand, if I do this and I use as an example blue, right? This is the time that I'm trading, right? And I've already explained to you what they mean. Frankfurt is very likely to clear one side. London is likely to reverse that and attack the other side. London US cross is a high volume, high liquidity time of the day. So I know that POI mitigations are very likely to be liquid and I want to be a part of that. And obviously your US Open is the same, right? You have a new market opening, things are going to happen, prices are going to move, and you have to be on top of that, of what's happening. If you're not comfortable following price, you should not execute. It's the bottom line, really. So I'm not trying to make this too long. I do hope that this bit of explanation provided you with some guidance. What we're going to do now is very simple. Go back to the charts, walk you through a day, and essentially apply the information that I've just covered. As I said, this is something that's very, very useful. Watch it, learn it, really take the time to see how it develops. You're not going to be good at it from the start. It's going to take time for you to be actually to be able to see these ideas develop ahead of time and anticipate the moves, right? It's going to take time and effort, but you will have to go through that process if you want to apply timing as a part of your edge in trading, which in my opinion, it is a very, very important piece of my edge. So once again, let's go back to the charts. Let's go through the very same information looking at actual candles and markets. Okay, traders, so for this last segment of the video, once again, we're back on the charts and we're going to be discussing the different times and just walking you through a day using the timing of it. Okay, now before we get into that, just wanted to mention that I'm currently holding GBP USD and Euro USD longs, which I've executed over here. Very similar trade idea on EU, which I've shared as well with everybody. This is based on the idea of trapped volume, which is a video that you have on my channel. So if you've not watched that, feel free to do so because this is based on that, right? The idea is we had a previous lower low right over here. We have a new lower low being placed, right? Higher time frame lower low has been established. So in my experience, it is very likely that we're going to see some sort of retracement up before we actually move further down, which is obviously the trend. But based on the fact that we just had the previous lower low taken out, which means that people that went short below the low have been trapped right over here. People that shorted below the low expecting the trend to continue are now trapped, and people that were long buying this market are very likely to have their stop losses below the low, so they have been stopped. So it is a great area to do business at. It is not essentially a POI, but it is something that I use as a POI. It's the very same thing. I apply the same concepts, right? I know that volume has been trapped through the low, so I know that we're very likely to see a retracement. So that's what I'm playing. As you can see, it has taken off about 70 pips at this point. I'm pretty much protected now. I'm just gonna let it run. Probably will not hold through the weekend, but for now I'm gonna let it run based on my planning and my statistics. This is the correct play to be doing. But once again, that's a topic for a different video. Let's get into the daily cycle and key times during the day. So what we're gonna be doing now is let's go to a 30-minute. I've not prepared anything. We're just gonna go back in time trying to apply, but you can see the Asian boxes over here, right? How they're very likely to get manipulated more often than not, both sides, right? Once again, it's not 100%, but it's the vast majority of the times. It happens just consistently enough for you to be able to exploit that with size. So let's go back in time. So it looks like we cannot go, we do not have an Asian box that's before this one available. So we're gonna work with this actually, right? And I have no idea what happened this day. I'm just gonna walk you through it. So let's go to the 30 minutes. And the first thing that we're gonna be doing is boxing out the Sydney range, right? Which is once again from 10. You can see the time on the bottom from 10 till 12, right over here. So now we're gonna make sure that we adjust for the high, which is right there, and the low, this is 12, so the low is over here, and this is the high. You cannot see it, but it's right there. So actually, in order for you to see it properly, let's change things up. Let's do this, do this, do this. Let's go gray, should work. Okay, so let's get rid of this. Awesome. Now it is much easier to see. We have the Sydney high, Sydney low, right? And you should be labeling this. You should say, hey, here we have a Sydney high and a Sydney low. Great. Asia comes in, the box starts to develop once again, and this is where we get the price action, right? In this particular day, we can see that the Sydney high remained unliquidated until Frankfurt, right over here, right in this particular day. So let's go through that. Let's draw a line right over here. Let's do line. So this is your Sydney high. Asia comes in and builds the range. This is where I'm coming to the market. This is when I'm waking up, trying to see what's happening, right? So what do we get? We get a very typical two sides manipulation, I'd say, right? Once again, in this particular day, right over here, we get the Sydney high and Asian high taken during London hours, right over here, right? And as we start moving, we eventually drop and we fail to raid the Asian low, right? And this particular day, my expectation would have been that this is gonna get taken out. And this is what I would have played, right? Because you look to your left, you see a POI over here, So you know that that is making sense right over there, right? So in this particular day, I would have expected the Asian low to get rated. It never happened, right? It actually happened the day after that. But once again, the same principles still apply. Let's now look through the London US cross hours and let's see what we get, right? So in this particular day, we had a very decent move, I'd say, during London US cross, which was once again from 12. So we measure this till 3 p.m. So 3 p.m. right over here. So basically we had a 40 pip move. Considering the daily range on this particular day, it is a very, very sizable move, right? So we get that move during London US cross, and that's it, right? That's all your key times. Once again, Sydney box, Sydney high, Sydney low are the keys. You want to be expecting both to get liquidated, which is exactly what happened over here. The Sydney low was taken out instantly. The Sydney high was not taken out instantly. It actually waited for the Frankfurt and London Open to get rated. You can see that on the London Open hour, we rated the Sydney high, and during Frankfurt, once again 6:15, 6:30, we started to move up to clear the Asian high. After that, we moved down, look at where we hit the midline, but we failed to clear the low, right? I would have expected this low to get taken, but it never happened in that particular day. So that is all well and good and part of what it is, right? So let's go to the next day. Let's just do this rather quickly once again. And then I'm going to give you a piece of advice, and then I'm going to end the recording, right? So let's go through Sydney 10, 12. This is your Sydney box, not a massive range. If you go through a lower time frame, you will probably see that a little bit better. Can we do that? Or is that too far away? All right, so we can. Awesome. So this is our 15-minute Asian range, once again from 10 till 12. So let's box this right over here. Right over here we have of Asian Sydney range, right? Sydney high, Sydney low. We can see that the Sydney low gets taken out once again. Sydney high gets mitigated but not taken. We move down, we build the range. Frankfurt comes in, you rate the high right over here, pull back into the midline, further squeeze up, which once again makes sense because if you look to your left, you do not have a POI to say that we're going to turn around here, right? This is why it's so crucial to put the story together. You do not have a POI to sustain that we're going to now move down and take the Asian low. When do we do that? When we hit a POI. Look. And actually, let me show you this. So let's get rid of this. Look where we hit before we turn. We hit a block right over here. This is not a block being hit. This is nothing. So it is understandable that we did push higher into the block, right? And then obviously you get that rejection right over here, 7 a.m., right? London Open right over here starts the move down, the descent, right? As I said during the explanation, London is likely to attack the other pool, which is exactly what you get over here. And in this particular day, I would have expected a midline test to continue further down. Once we have this information, I'm not going to expect that we're going to be getting above this high at any point. Why would we do that? We've already cleared the high. We've now taken the low. If we're going to retrace, we're going to do that. We're going to do so into the midline, and then we're going to fall further down. But this is once again just my understanding of the markets. I guess I cannot expect everybody to view it the same way I do. All right, so let's go through this. 12. We start building a range right over here. Not really anything major happens during the rest of the day. Might have been due to news. You have to factor that in. News plays a role. News play a role. You want to be factoring that in, right? Because as an example, if you have FOMC at 7 p.m., you're not going to expect a big move during London US cross or US Open, because you know that price is going to be waiting for that, right? So you have to factor that in. And in this particular day, we had consolidation during all of the London US cross hours, which is very rare, but happens from time to time, right? And that is due to the fact that we had this aggressive push down throughout the morning of the session, right? So you have to put everything together once again. So I think that this is everything that I wanted to cover. We've covered the key times. We've covered what they mean, how to trade them, what we do with them, what we look for them, and essentially this should provide you with a lot of guidance in your trading when it comes to understanding the different times during the day to be doing business at. So with all that being said, guys, thank you very much for listening. If you enjoyed the video, feel free to drop a comment and a like. I will be gladly going through that. If you want me to make more videos on the subject of timing, feel free to ask me for that. I'm more than happy to help. And remember that the mentorship link is in my description below. You will gain access to a community of like-minded individuals. We do weekly outlook videos every single week, which I post for everybody, where I share my ideas and analysis, and I do share my daily analysis as well through the Discord as the market moves. So I look forward for you to joining. I see you guys very soon. Thank you for listening, and enjoy the rest of your day.